Welcome to Heartofeconomy. America today stands divided between two economic realities. On one side, millions of families drown under credit card bills, high interest rates, and a daily pressure to spend. On the other, a small elite multiplies billions quietly, consistently, and relentlessly. Are these two extremes simply the byproduct of the same system? Or is the system designed this way? In the first quarter of 2025, the average American with credit card debt owed $7,321. That's nearly 6% higher than last year and over 25% higher than just a few years ago. Total credit card debt, a record-breaking $1.18 trillion. Meanwhile, the top 1% of Americans control almost 35% of the nation's wealth, a share larger than the combined wealth of the entire bottom 90%. That is piling up. Wealth is compounding, both at the same time. The debt fuels. Credit card interest rates now average 28.6%, a crashing level especially for lower-income households. Over 10% of users are stuck making only minimum payments. For them, debt never shrinks, it only grows. Interest isn't just a cost, it's a chain. A trap that tightens every month. The interest trap, disguised as convenience, but in reality, battlefield. The wealth towers. Now shift the scene. Inside a Manhattan skyscraper, a single trade, a few strategic bets, and billions are added to portfolios overnight. Taxes? Barely noticeable. Assets? Always rising. In 2024 alone, the richest 19 American families added $1 trillion to their wealth. Collectively, they now hold over $2.6 trillion. Today, the top 1% own more than one-third of all U.S. household wealth, a historic record. This other world, loud, bright, intimidating. Living in the system isn't unfairness. It is the system. The top 1% capture 22% of total U.S. income. The bottom 20%, just 3.1%. America's Gini coefficient now sits at 0.485, the highest in 50 years and far above nations like Germany or Japan. More than half of all consumer spending comes from the top 20% of earners. Two voices echo across the divide. I'm just trying to cover rent and groceries. I provide liquidity to markets. I feel growth, that's my contribution. A one-sided economy, but can it truly survive long-term? Inequality is rising across Europe, but America leads the extremes. In developing nations, the cracks are deeper. Interest payments consume more than growth, while social protections remain weak. This isn't just an American story, it's a global warning signal. The question becomes, does this model need reform or a complete rewrite? The real question, can I climb the ladder? Can the average person actually move up? Or is success just a polished fairy tale? Here's what the data says. Social mobility in the US is at a 40-year low. Someone born in 1980 has only a 50% change of earning more than their parents. If you're born into the bottom 20%, your odds of reaching the top 20% are just 7.5%. Yes, a few rise, but for most, the system defines their ceiling and their shadow. This isn't meritocracy, it's a mechanism of selection. The system opens doors for some and locks others inside. For those drowning in debt, look for 0% APR consolidation offers. Build an emergency fund, target at least 20% of your income. Pay off highest interest debt first. For investors seeking to rise above the cycle, explore ESG and impact investing. Look into education, fintech, and alternative credit markets. Position yourself for industries that grow not just wealth but opportunity. Which engine are you part of? The one powered by relentless debt, or the one driven by capital and control? Debt, wealth, tomorrow. This nation runs on two engines, one fueled by debt, the other by wealth. It's not about fairness, it's about economic design. So ask yourself, will you keep pushing the mission of debt, or will you invest in the steady, long-term power of capital? This voice is only the beginning. You're here now. It's your voice next. Subscribe, join the debate. This channel isn't just about money. It's about perspective. It's about redefining the economy. And you, where do you stand in this change? Stay tuned. See you in the next time.